Hi traders, in this very video I'm going to be teaching you guys about liquidity, right? So I'm going to explain liquidity to its simplest terms. Liquidity is one of the most talked about topics in the whole trading industry, right? You hear everybody saying liquidity, 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 right? In this video now I'm going to break it down so you guys can understand and know what it is, know how to spot them, and know how to avoid being a liquidity in the market. So let's jump right into the video, right? So let me share my screen so we begin. So I believe my screen is clear. Now first, what exactly is liquidity in the market? Before we go over, start identifying it and start identifying how you can avoid being the liquidity, right? Now first, what's liquidity, right? So let me explain it and then use the text so those that will be taking notes can easily take notes. Right, first, what's liquidity? Liquidity is just money, right? Liquidity is money. Let me take note this way. Liquidity is money. Now let me explain the way you're gonna understand it, right? Now liquidity is money. What does that mean? If you take a trade now, you take profit, right? It means you make money from the market. You are taking liquidity out of the market. You are taking money. You just made some profit. That means you are taking money out of the market, right? That's what liquidity is. Then if you go over, take a trade and you get stopped out, you hit stop loss. You just lost money to the market. You just lost some liquidity into the market, right? Just money in the market. Then if you take a buy, if you open a position, you open a buy, you are buying into a liquidity, right? You are buying into a liquidity. That's what liquidity is, just money for effective trading. Then if you are selling, you just take a sell. You are selling into liquidity, right? That's just what trading is. Everything regarding trading is always about liquidity. Right now, liquidity is just money in the market, right? And where does this money lies? Where is there money in the market? Right? Where is there always money? I said liquidity is money in the market. Where is this money? Right? This money is at our stop loss. Right? If you take profit now, you are taking money out of the market. That means you are not giving the market money. That is no money in the market. You are taking money out. So if you hit stop loss, you just lose money to the market. That's why you are giving money to the market. That's what liquidity is, and that's where liquidity is in our stop loss. Meaning, if you don't lose money to the market now, there might not be liquidity in the market, right? So now that's what liquidity is. Liquidity is money in the market. I believe that's self-explanatory. And our stop loss, our SL is the liquidity. Our SL is the money, right? Is the liquidity in the market. If you lose, I lose, other retail traders lose, then there is now liquidity provided into the market. Now, I'm going to explain this again, or I'm going to put this again. Liquidity is all the market wants, right? Is all the market wants. Now, I don't normally teach this, right? If you notice the previous video I did on liquidity, I didn't teach it this way, right? I didn't break it down this way. I didn't tell you your stop loss is the liquidity. I didn't tell you guys liquidity is all the market wants, right? I'm doing this, I only teach it this way to my students, right? Those are my mentorship class, you already know, this is how I teach it, right? Not everything. I'm not going to teach everything right here, but I'm also going to teach it in a way those that cannot afford my mentorship class can easily learn from this YouTube video. I'm doing it like this. I'm bringing everything down, making sure you guys become profitable, right? That's what I do. Try to make sure you guys are making profit from this market. And before I continue the video, I want to sincerely appreciate every one of you who have been supporting this channel, right? We've just crossed over 1,500 subscribers, right? I really appreciate, and we do get over 100 share weekly. So I see your effort, right? I really appreciate that. So it's important to always share with your friends, because what I drop here is helping you guys. I believe that's why you're sharing it. Now liquidity is money, and your stop loss, my stop loss, our stop loss is the liquidity, is the money. Then liquidity is all the market wants. If the market takes us out, what does that mean? Let me explain that. If the market takes us out, we just lost money to the market, and that's what the market always wants, right? Now, how do I know that's what the market always wants? Remember, if the price is going to push up, let me explain, right? Since we're going to be analyzing with the chart, So I just joined the blue gang, right? You notice my chart is now blue. I just joined the blue gang. Now, what the market always wants is liquidity. If the market is able to take us out, remember, if the price is here, you want to sell from this region. Me, I want to sell. Other retail traders will want to sell from this region. But for we to be able to sell, if we enter for our sell, let's say we took our sell, I enter for my sell limit order, I'm waiting for the price to drop. For the price to drop, remember, you should know that institutional traders need to enter into the market. Meaning those institutional traders, those bigger banks need to sell at this region so that the price can drop. If they are not able to sell at that region, the price might not drop. So what's going to happen? For them to sell, for them to enter for that their trade, they need liquidity. They need enough liquidity for them to enter. If they are buying, they need enough liquidity for them to buy into. If they are selling, they need enough liquidity for them to sell into. So if there is no enough liquidity, their order will not get filled. Once they click on sell at this region, the order will not get filled. So what is going to likely happen? They are going to push the price up, take out our stop loss. We traders who take any trade from any region take us out before they can now enter the market. And once they enter the market, the price will now drop or will now go up because it has now getting enough liquidity for it to move or for institutional traders to enter into the market. I believe that's self-explanatory. Liquidity is what the market wants, and I believe you guys now know what that means. Now that brings us to the next part of this video, areas of liquidity. Where is there always liquidity? How do I know if the price has just stopped traders out? How do I know if the price has just swept the liquidity? Then I should enter for my trade. So let's jump right into it. Let me show you. These are the areas where we have the most liquidity in the market. If you go over, check YouTube video, check the whole YouTube internet, right? Nobody's gonna explain it the way I'm explaining it, right? Trust me, you have Google checked, right? Those of you watching me now, I believe you have watched so many other YouTubers. Nobody explains the way I do it, right? I explain things in the simplest terms, right? So you guys can also become profitable. So do your best to also keep watching, share with your friends so they can also benefit, right? Areas of liquidity, right, in the market, right? Areas of liquidity. Now the first area of liquidity are highs and lows. I believe you already know this by now, right? Are high and lows. By now you should know this, right? Above any high there is liquidity. What does that mean? Once the price push up to this point and started dropping from that point, automatically there is liquidity resting at this very high. How do I know, and why did I say there is liquidity resting above the high? There are two liquidity here. There are two ways I know there's liquidity here. First way is you, SMT traders, you that trade order block or point of interest or supply and demand or breaker block. You know, you're going to mark out another block somewhere here and you want to sell from this region. Let's say you mark out another block, less like this, and you want to take your sell from here. Right, where is your stop loss always going to be? Above this high. So you have your stop loss here. So meaning there's liquidity resting above this high. If the price eventually comes up to clear out, take out this high, it means you will likely get stopped out because you are taking your trade from this other block and the stop loss is above that high. So this high now has liquidity automatically. I don't need to explain that 2 times. You now see the first reason why this high has liquidity. Then the second reason is this. Those support and resistance traders are going to mark this out as a resistance. And what is then happen? They want the price to come there and they want to sell. Their stop loss just slightly above that resistance level. They can target the next support or wherever. Right? Now, there's liquidity resting right here. Why? Because those support and resistance traders now have their stop loss above this high. What's always happen? The price, once the price comes, it's going to take us that high. Hit stop loss of we SMT traders, hit stop loss of those support and resistance traders before institutional traders can enter into the market and the price will drop. Because once institutional traders enter the market, now the price will drop. If they enter for their sell, the price will drop. And if they enter for their buy, the price will drop. So above every high, there's liquidity. We're going to go to the chart and I'm going to show you. Then below every low, let's say this is a low, the price pushed up. Below every low, there's liquidity. And I believe you guys already know why there's liquidity. With the way I explained this high and this low is just the opposite. Right? Now, what's going to likely happen? Once the price comes, the price is going to take out that high, then drop. Or if it's a low, it's going to come, take out that low, then push up. Let's go to the chart. Let me just identify some for you. Let me identify some for you, then we move on. Take a look at this. What happened at this region? This is a previous resistance. What happened? The price ended this week just to hit stop loss of traders who take their sell from here. What happened? Immediately started that week, stop traders out, started dropping. Those eccentric traders, now you see them marking out this area as an order block, and they want to take their sell from this order block. Support and resistance traders, now you see them marking out this high as a major resistance, which the price has rejected multiple times. The first time rejected it, second time rejected it, third time rejected it. So they want the price to come back and they want to take their sell. So what's going to happen? We essentially that we have our sell limit right here. We have our stop just slightly above the resist, above the high. Then what happened? We get stopped out. We just lost money to the market. Instantly that just stepped into the market and the price started dropping. Simple. So that liquidity now has been taken out and the price started dropping. In this case now, the price did not take out this high, did not take out this liquidity resting above this high. Why did the price not do that? There is something called engineered liquidity. The price came, created a high right here, came down, took out that high. Automatically, those traders who have their sell right at this high will get stopped out, right? This is called engineered liquidity. We are going to get to that later in the video. Right, take a look at this. Is another nice example. This is a major high. What happened? The price took out that high before dropping. This is a major high. What happened? The price took out that high before dropping. Right, simple. Let me show you low. This is another example. This is a major low. What happened? The price took out this low, sent out this. I guess I was even stopped out on this very trade. I took a trade from this region. I was stopped out on BTC. Right, I took a buy from this region. Why? Because this is a low in the market. The price took me out, hit stop loss of me and other traders, then before I started buying. So this low now has liquidity. I was using this other low as liquidity. I'm going to show you how to trade it. Trade with the liquidity, right? It's just major highs and lows are liquidity, right? There are areas of liquidity in the market where there is always liquidity, above highs and below lows. That's the only one I'm going to just say, where I'm going to just teach you guys with, so the video will not be too long. If you want to learn all of this, I have about 3 different areas of liquidity with a trend line. I have not even explained trend line. If you want to learn the 3, learn everything from me, I have a mentorship class. There's a link in the description. Just click on the link and then you'll be redirected, then you join. It's about $35. $35 in Naira is about 35,000 Naira for about 3 months. You'll be with me for 3 months. Once you join, we have Zoom call, Zoom meeting, that's Zoom class, 2 times every week. Once you join, I'll send you the schedules, then I'll send you some recorded lessons. Then you also get signals every time. You also get signals, my trade signal. All the trade I'm taking, I do send out the signals to them, right? So if you wish to join, there's a link in the description. So that's by the way. Then highs and lows. Then how do the price react? How do you take trade? But how do you take advantage of this liquidity? Remember, we have 3, but I just gave you just 1. Right? I didn't explain the rest because it's gonna take time. That's why my mentorship class is there for you to learn all of this. Now, how do you trade this? How do you trade this? Take advantage of this and stop being the liquidity to the market. What do? You want to mark out your key levels. You mark out your key level above. Let me put it as key levels. You want to mark out your key levels above highs and lows. Using those highs and lows now as your liquidity, you want to go over, take your trade from your key level. Key levels above highs, okay. Key level above highs and lows. So those are writing down, right? Those are writing down. Let me show you how to write it down. Let me show you what to write down. You mark out key level. Write it down this way. Mark out key level. Key levels above highs and lows. Right now, if you mark out any key level where you are waiting to take your trade from, where you're gonna likely take your trade from, either buy or sell. You want to check, does that very level has a low? Does that very level has an area where it's gonna likely take out? If I want to take my buy from here, is there a chance of me being the low which the price is gonna take out? If I'm taking my buy or sell from this region, is there a chance that the price is going to take me out before buying? Now take a look at this very nice example. SMC traders now will mark out this area as an order block. I want to take out buy from here. I want the price to come back here and want to take out buy. What happened? The price came, took out this low, hit stop loss of every trader who took their buy from there. Nobody will start having about 58 pips stop loss. So everybody wants their stop loss to be somehow close, targeting maybe 1:3, and we get stopped out. Right? Simple. Why? Because this is a clear low which has liquidity, and that's what the price will always do. Once the price is done taking out all of those liquidity now, then it's gonna start buying. So what did I say? You want to mark out your key level below lows and highs. Now if you check out this very low now, where's the nearest key level? I have a key order block right here, which I feel once the price take out this low, it's going to likely get to this my order block, or my breaker block, or my supply, or my demand, right? Any key level you'll be taking your trade from. So this is a nice OB, and let's see this is what the price respected. Simple. This was the OB right here. This last, I believe you know what order block is. The last opposite candle before the price pushed up, right? Now, what happened? The price took out this low and tapped on this and started buying. You understanding what I just said now, understanding what I'm teaching now, you take your buy from here, stop protected below this low, targeting the next high. Let's say 1:3, collect your 1:3 and then get out. Target 1:3, which is right here. 1:3, which is my lowest target. You win your trade, right? Now let's look for another nice example. This is another example right here. Throughout last week, I would have caught so many trades on the market last week, but I wasn't active. Right? I wasn't active, seriously active last week. So we literally missed so many trades, and I'm so glad so many of my students caught so many trades. Right now, if you take a look at this is an order block. This was the last green candle before the price started dropping. The last opposite candle before the price started dropping. So what happened? You want to take your sell from here. Why are you gonna take your sell? Why did you think that the price is gonna take out this high before dropping? Because it already has this high is gonna take out. Since those highs are already available there, then the chances when the price take out these highs is gonna respect this your own key level. Stop loss above it, targeting any nearest low. 1:3, you want the trade. I believe about 4 of my students caught this very move. They were sending to me directly. They caught this very move, about 4. But I wasn't active. I wasn't online, so I didn't catch them all. Now, this is another nice example. This is a low right here. An obvious low. I didn't know why I even fell for this. I didn't know why I even fell for this very trap. Now, this is an obvious low, which is a draw on liquidity, which has liquidity. So if you're taking your trade from here, you should watch. Is there any chance that the price will take out this low? If you notice, this is a clear low, and there's no other clear low protecting it. This is just a minor retracement. This is not a clear low that's gonna make this valid. If this is a clear low, that means this one is gonna be valid. But if this one is not a clear low, meaning this low now will not hold. So this is not a clear low. I was using that other low. So if you take your trade now, you get stopped out. Why? Because it's not a valid low. And what happened? The price tapped on OB and started dropping. Now take a look at this sell I took right here. It's because the market later changed character. That's why we lost this very trade. Now this was a sell I took right here. I took it from this very OB. There was an order block right here. I took the sell right there. Now what did I use? I used this very high. This is a nice and obvious high. Using this as my draw liquidity now, I took my sell from here, which was a very nice and perfect trade. But the market does what it always does, right? It took me out and started dropping. Before it started dropping for some time, let's look for another nice example. This is another very nice example right here. This is a very nice high. A nice high. A high. So this high now is what is gonna protect this high. Now how is it gonna protect it? Once the price comes, every trader who have their stop loss above this are gonna get stopped out. Once they get stopped out, now what's gonna happen? it's natural that we now enter the market. They now have enough liquidity to buy or sell into. Since it's a sell, they want to sell, they now have enough liquidity to sell into. If it's a buy, they now have enough liquidity to buy from. Simple. This is another nice example right here. This is an OB. Nice order block right there. Pretty cool. And what happened? Using this high as drawn liquidity, now the price tapped on this order block and started dropping. Really are seeing it. That's how the price keep doing it every single time. If the price is able to take out all of those, like I said, liquidity is all the market wants. If the price is able to get that liquidity, then it's gonna drop or it's gonna buy. Take a look at what's happening recently now. Currently, what happened? The price came. I haven't marked out this OB, but I didn't know when the price came there. The price came, took out all of these highs. I didn't know when the price came there because I was preparing to record this video. The price came, took out all of these highs because it's a clear drawn liquidity for this OB. And what happened? It came, tap on the OB. If I say OB, I mean order block. You should know that. Tap on this my order block right here. It started dropping. My stop loss protected above that high. 1:3 is already done. It's already only 1:4. 1:4, you're already hitting take profit. Using all of this high now as my draw on liquidity. I won't be taking myself from this order block. Why? Because there is no high protecting it. No clear high. If you notice, there's no clear high protecting this my order block. So it means the price is gonna likely take me out, using me as liquidity for them to enter into the market. Similar thing happens on all markets, on your gold, on your crypto pairs, any market. Take a look at what happened right here. This was a clear low. I took this trade, I sent out the signal, but the price did not trigger us in early. So when it came down, I already cancelled my limit order. I sent out the signal straight out to my Telegram. I also have a free Telegram where I give out some of my trade signals for free. You can join there. The link is in the description. You can see recently we've been losing trades for some time, but I guess we've started winning again. If you know, this was a setup right here on gold. Take a look at this. I was using this low as my draw on liquidity, using all of this low as my liquidity for the price to tap on this point and buy. And before the price came, I already cancelled my order, and gold already made a new all-time high before dropping, so I already cancelled the order when it's already making an all-time high. So simple. I believe the video was clear enough. Believe me, explaining liquidity was clear enough, understandable, and you can go to your chart now and start marking out those highs and lows. If you mark as any order block, check if is there any high protecting my order block, right? Is there any low protecting my order block? If there is none, it means your order block, which obviously have a high, is the liquidity. Simple. If not, all the trade I do to, if I set it out to take trade, trust me, it's gonna just be entry then take profit. If I settle down and take trade, only when I'm always stressed, right? When I'm stressed and I feel I still want to trade, that's when I sometimes get stopped out and I do take messy trades. But if I'm really settled and I take trade, it's always a win, right? So if the video was helpful, don't forget like the video like you always do, right? Share with your friends and turn on the notification bell if you have subscribed. And if you're interested in learning from me directly, love the way I teach, go click at the link in the description. I also do a one-on-one class, right? I also do go for one-on-one. If you want me to teach you one-on-one, there's also a link in the description. Once you click on it, all the instructions will be sent to you, right? So see you all in my next video. So take care, guys.